Do I have to declare the entire year when I arrived in France, even if I arrived in the middle of the year?
So if you arrived in the middle of the year, or let's say April, you have to declare the entire year, all the revenues. So let's say between January and April you were in the US, you made revenue in the US for this period. Then you arrive in France in April and you work, let's say, for a new employer around June. Yes, for the year 2026, you have to declare the whole year as you become French tax resident. And when you are French tax resident, you are supposed to be taxable on your worldwide income. So yes, all year.
Concretely, for an expat who wants to come in France, uh, to live there, to enjoy the lifestyles, what about taxes in French for him and what's different?
The question is interesting because you can appreciate the French lifestyle, the French croissant, and so on. But not only the salary, but the tax question is very important. Because if you come to France because you think it's quiet and you make the same salary you already make in the US, you can be surprised in a bad way, bad manners about the tax system. Tax system is mostly similar of all European tax systems. So I mean, income tax is submitted to tax brackets. You have different tax brackets, the lowest and the highest, that goes from 0 to 45%. And depending on how much money you make a year, your money, your salary is going through each tax bracket. For instance, let's say you make 100,000 euros a year. The first 11,000 goes in the 0% tax bracket. Then you have the second tax bracket at 11%, then 30%, 41, and 45%. In this kind of bracket system, progressive French tax system, it is very costly for, let's say, a US citizen that are used to be taxed on his salary in the US, because the French brackets tax system goes higher and faster. So you pay more taxes here in France based on salary.
And do you think for someone who wants to come in France, it's more profitable for the retirement or before the retirement?
Always in terms of taxation, because this is the only subject of this video. Is it better to come for retirement or to make salary before retirement? That's the question.
Yes, exactly.
I don't have the answer. There is no way to answer this. All I can tell you is that if you come for retirement and you have your US citizen pension retirement and you live here in France, don't worry, you will not be subject to double taxation, because according to the French-US tax treaty, there are ways to avoid the double taxation by tax credit mechanism, so it will be okay for you. But if you come to France to work and to make a salary for a French employer, you will be first French tax resident. Second, you will work for a French employer, so the money you make is related to the territory, French territory. So in this case of a salary, there is not really a matter of double taxation, because you will be taxed here in France based on the tax rules. Even if you have to declare your French salary in the US, but don't worry, again, because of the tax treaty, what you're supposed to pay in the US will be in some way cancelled by tax credit mechanism. So I don't know if it's better to come to work for a salary before your retirement, or maybe waiting for your retirement to enjoy the French lifestyle.
Most expats know about French taxation, but what about the social contribution?
Social contribution is a very big subject, because they are like everywhere in almost different types of revenues in France, on your salary, on dividends, on French interest, on French real estate, rental income, and so on. But for example, social contributions are very important on salary. If you come to France to work for a French employer, you will be submitted to those French social contributions. And the amount of these social contributions is around 23% of your salary. You will have an interview with a French employer, and you will be said that your salary is, let's say, 100. You already have to understand that this salary, this 100, is raw salary. You have to remove around 23% to have your final net salary, the one you will take in your pocket on your bank account in the end. So if your proposed raw salary is 100, you will go back with 77 euros in your pocket. This is social contribution on salary.